So let's do some examples of posting. We know how journal entries work. So let's consider the journal entry. In the journal, purchasing equipment by paying cash of $6,000. That's this right here. We know how journal entries work. This asset equipment has increased. This asset cash has decreased with the debit and credit. Okay, we got the journal entry. We've thought and we've analyzed. We're done. Now it's time to post. We turn our brains off and we say, okay, I'm going to post to the cash account in the ledger. Let's just write ledger here. This represents the ledger, a book, which is a collection of pages, one page for each thing. And I don't think at all. I just say, okay, I got equipment 6,000. I'm copying it right down here. I don't care what this debit right here means. I don't need to know now. When I'm posting, I don't need to know anything. I did my thinking here with the journal entry. Now I'm posting. I'm just sorting and copying. I see I have a credit here to cash. I'm just going to copy it down right like that. Posting is just sorting and copy. That's it. All right, we got another transaction here. We bought some inventory on account for $17,500. Here's the journal entry. We got the inventory, so the asset inventory went up. And we didn't pay for it yet, but we promised to pay for it later, so the liability, accounts payable, also went up. We just did some thinking. We analyzed the transaction. That's good. Now, time to turn the brain off, and we're going to do some posting. Posting is just sorting and copying. Oh, we got an inventory item here. It's a debit. I don't care why it's a debit. I don't care what debit means. I'm just copying it right here. Oh, and I see I've got a credit to accounts payable. I'm just copying that here, sorting and copying. I'm not thinking, just sorting and copying. This posting is easy. One more example. We issued some capital stock, $110,000 cash. Journal entry looks just like this. The asset cash goes up with a debit. The equity account, I'll just abbreviate that EQ, capital stock goes up. There we go. We did some thinking. We're done with the analysis. Now we're just sorting and copying. We're posting. We're just sorting and copying. So remember, I've got one book, the journal, where the journal entries go. And I've got another book, the ledger, where I've got an account for each item. Posting is copying from the journal to the ledger. So I just say debit, cash, 110,000. Credit, capital stock, 110,000. And what I would do in a full example is I'd have a whole bunch of journal entries with a whole bunch of cashes, and I'd copy them all to the cash account. I'd copy them all to the accounts payable and all to the cost of goods sold or whatever. Posting, just sorting and copying. That's all it is. Now, this posting process is prone to errors. Copy things to the wrong side. Copy down the wrong amount. Copy it to the wrong account. The nice thing is this. We can cross out all of these when we have a computer do this. Computers are great at posting. Computers were made to do posting. Yeah, we can use them for other things now, but computers were made to do this. So when humans are doing posting, they make these, but computers have eliminated these errors in businesses that use computers to do the basic bookkeeping functions.